Is the sun going to keep shining on the housing market? The roller coaster ride of the housing market. The sun is shining right now. How long is the sun going to be shining? Let's get into a market update. Housing. Let's get into it.
I got a heart on fire. Someone hit the alarm.
As 220 comes to an end, there are solid signs that suggest the housing market will remain strong in the upcoming 2022 year, ladies and gentlemen. Right now, you have rising homeownership equity, higher demand for second homes, and improvement in investor sentiment. That's all good news that point to a potentially strong 2022. Right now, low mortgage rates expected for the year ahead should also help, increase homeownership opportunities for buyers from the data of all the ethnic backgrounds. There are some potential issues that we need to keep an eye on. Talk about it more throughout the presentation. The 800-pound gorilla, one of them that I've talked about for over years, inflation. It's not transitory, never was. Will remain a concern in 2022, as it's at a 40-year high as long as supply constraints continue to be an issue. The impact of the Omicron to the economy is still an uncertain, but there was a case in LA. The person was vaccinated twice and had mild symptoms. I was on a conference call in Africa just to listen, and they've had mild issues up with it over there. So homeownership equity up strong in Q3 21. Homeowners have seen their equity rise by about 31.1% year over year in the third quarter of 2021. That's according to the latest CoreLogic Homeowner Equity Insight Report. And the total number of mortgage residential properties with negative equity consequently decreased by roughly 28.9%. That's from last quarter's 1.6 million homes, with home prices growth at the highest level in more than 45 years. Equity gains hit record high and allowed 70,000 properties to regain equity in the third quarter of 2021. When we look at a state-by-state breakdown, no surprises. California had the largest equity gain, with the average homeowner gaining $118,700 during the past year. The share of mortgage residential properties with negative equity in the state remained unchanged from last quarter at roughly 0.8%, significantly below the 25% plus in the fourth quarter of 2009. That was during the Great Recession. So I keep an eye on the vacation homes. I manage vacation homes in a lot of different areas, so I keep an eye on these reports. They're still in high demand. Demand for vacation homes and second homes remained elevated in 2021 as work from home policies solidified that, and mortgage rates continue to stay low by historical standards. The share of vacation second home sales climbed up to about 6.6%, the highest level in 9 years, as more buyers search for more space and wanting that healthier lifestyle, of course. So despite an improvement in the pandemic situation, some people would say it's over. Some people want it to continue. More employers began to adopt permanent remote work policies that allowed employees to work at home permanently or on a hybrid basis, away from the office. I'm a commercial real estate broker. I file stuff, a lot of stuff in the Midwest. And when you look at the retail space and office space, there'll be a lot of changes. So many workers who have this flexibility to choose to live in the resort communities in search of more space, it's working out. That's what they want. Investment buying bounced back, but still below pre-pandemic levels, 100%, with the eviction moratorium lasting through the end of September, and that's all working its way out. They put a hold on foreclosures, banks. For most areas in California, many real estate investors have been holding, sitting on the sidelines. Others have left, off buying until there is more clarity in the rental housing market. So as the economy, started showing signs of a strong recovery early this year, some investors have ticked back. That's what I'm seeing. and returned to California. Others I know pulled out their whole portfolio and put it in Boise, Idaho, Wyoming, and other areas. So the share of homes sold for investment purchases inched up 9.5% in 2021 after dipping to a 19-year low 8% in 2020. So nearly 3 out of 10, that's 29% of the investment properties purchased were intended to be flipped for profit. So the investors are in here in California, and those first-time buyers are competing with those investors. That's the highest level since 2014 when home prices were significantly below current levels. If we look at kind of non-white home buyers make up over half of all sales for the first time. The share of non-white home buyers continued to grow this year, and its share was more than half of all sales for the first time since roughly 1995 when the survey started collecting statistics. So seeing new homeowners coming into the market. In 2021, more than 2 out of 5 homes sold were purchased by whites, 45%, followed by Asians, 19%, Latinos at roughly 18%, and then blacks came in at 4%. Low cost of borrowing in recent years, along with employees adopting more flexible remote working policies, offer an opportunity to many non-white homebuyers to achieve the American dream. So we kind of sum it up a little bit. Despite the overall improvement, there is still a lot of needs to be done to close, racial homeownership gap, and the share of Latinos and blacks continue to trail behind the share of the general overall population. Inflation, has hit, as I said earlier in the presentation, a 40-year high. Consumer prices surge more than any time in history, expected with an inflation rising almost 7% from a year ago in November. Energy prices and used truck and car prices were major contributors to the jump in inflation. I called one of my car guys in Anaheim Hills. You can't get cars, specifically some AMG models, Mercedes. So as both went up by more than 30% from a year ago, strong consumer demand and supply chain bottlenecks remain the primary reasons that pushed up prices, and inflationary pressures, have been hitting workers hard. We're energy independent. We're not energy independent anymore. We're depending on other countries for oil. We have the reserves here. So real average hourly earnings accounted for inflation, in fact, declined 1.9% on a year-over-year basis in the latest report. With inflation remaining stubbornly high. The Fed, this is interesting, could announce an acceleration of its winding down of asset purchases in the next meeting. We'll see. That's all talk. They just ramp it up a little bit, keep printing. While rates have been flat in the past few weeks, we could see some volatility before the end of the year. And so, ladies and gentlemen, right now the sun is shining brightly for sellers. We don't know where the market's going or what's going to happen tomorrow. And the key point is, there's so much volatility right now. The government could enact something tomorrow that totally stops everything. They got that kind of power. Interest rates, winding down asset purchases, inflation, all this stuff going on. And then we're back to zero. So the hurricane is coming. It's just a question of when. So what I'm trying to say is hurricanes are good and sunshine is good. You just need to be forward thinking and plan ahead and know what markets to invest in if you're in real estate and what have you, and what stocks to buy. You just got to keep an eye on this stuff. But the sun is shining. Some people would argue that inflation is hidden in the housing market. We have inflation is a major issue. We have a lot of institutional investors. I know for sure BlackRock in Texas. I have property in Round Rock outside of Austin, and I talk to agents and brokers there and other areas throughout the country. Institutional investors are coming in, and people are competing with them for houses in every market, every major market. So they're propping up the market too. They're coming in because hard assets, that's the change. Investors are pulling their money out of the stock market, and they're putting their money specifically into single-family homes. and a lot of institutional investors, a lot of investor groups. Some people are buying up thousands of homes. So what do you think that's doing to the housing market for the average buyer in the housing market? So we need to keep an eye on that. Equity positions are up on homes all across the country, but talking to lenders, a lot of people are been pulling cash out of their homes over the last year. So what does that mean? People are extending their mortgage debt. They're offering 40-year mortgages. People don't talk about that, but I see that, and I talk to all my lenders every week, and I ask these questions. So that is concerning. What are you using that cash for? Are you using it for investment purposes? Are you using it to improve a home? Are you using it to pay down debt? So we need to keep an eye on that and see how that works out. So things look promising in the short term here. The sun's looking good. We just need to keep our eye on the prize and think ahead and be prepared for changes in the marketplace to make sure we talk to our institutional investors, our buyers and sellers, and give them the most robust information so we can get ahead of the curve. Take care. Ciao.